Welcome to the Mortgage Rate Weekly Market Update for the week of May 16, 2016. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was certainly a good week for mortgage rates. Mortgage rates remain at record lows, all-time 3-year lows. If you take a look at the bond chart on the screen, you can see mortgage rates are being capped by that blue line. Every time they hit that blue line, they're turned lower typically, which means rates could move slightly higher. So with the bond not moving above the blue line, record lows, we're going to recommend locking your mortgage rate right now. Just lock it in, all-time record low. Rates are in the 3s. It's unbelievable. It's the best time to refinance or buy a home in a long time. So if you've been on the fence, get off the fence. So lock in your rate, get under contract, get that refi in. Now, in economic news, some big reports. The Federal Open Market Committee, or the FOMC, had their meeting in April. And as expected, they decided not to increase the Fed funds rate, which we didn't expect them to because the economy's not doing good. And they cited that in their meeting. When they released the notes, the big reason for leaving interest rates steady is they have concerns over the economic activity has appeared to slow. And that's the biggest measurement of that is the GDP. It's a broad measure of economic activity, and the GDP for the first quarter of 2016 was 0.5%. Take a look at the chart on the screen. That's not good. And if you look from the end of 2015 till now, the GDP has been going lower and lower each time it comes out, each quarter. So that's not a good sign for economic activity, hence why the Feds have held the Fed funds rate steady. And then we also saw the release of the April 2016 jobs report from the Labor Department. That was released on May 6th. It showed only 160,000 jobs created for April. That's well below the 207,000 expected, and that's the lowest number in jobs created since September 2015. So the trend for lower job creation is not showing a strong labor market in the U.S. Retail sales for April, though, 2016, they did rebound higher to 1.3% from the negative 0.3% in March. So April retail sales was a very good report. It shows consumers have been opening their wallets in April, getting out there spending. That was the biggest jump in retail sales in over a year. And remember, retail sales measure, it's a measure of the total retail store reports from all businesses throughout the nation. Then we had consumer sentiment on tap as well for April 2016. That rose 6.8 points from March to 95.8, which is the highest reading since June 2015. So consumer sentiment increased across all age groups. The optimism in the report is attributed to gains, to income gains and better outlook on the economy from lower interest rates and lower inflation. So consumers are feeling good about the economy. Retail sales are up, consumer sentiment is up, but the economy itself appears to be slowing from reports. We also had the Producer Price Index for April come out. That's a measure of inflation at the wholesale level. It was very tame, only rose 0.2%, and year over year it remained flat. So we don't have much inflation. Consumer sentiment's up, so those things are good. But weekly initial jobless claims was released on Thursday. It moved up 20,000 to 294,000 claims for the week. So the question is, are we seeing a change in the labor market with the jobs report and the unemployment claims going up? We don't have enough data to see yet, but if you look back from March, the claims have risen by 46,000 claims on a weekly basis. So that's not a great sign. If we go above 300,000 claims, that's going to be bad, especially with the jobs report showing a decrease in job creation. So we'll have to keep an eye out on that. And then in housing news, the National Association of Realtors, or NAR, reported existing home sales for March 2016 jumped 5.1% from February, ending up 1.5% higher from year over year. Now, the inventory of existing homes is still very low, as reported by NAR. It's at 4.5 months of existing inventory from March 2016. Now, a normal supply is considered 6 months supply of existing homes for sale. We're below that at 4.5, so we're what's a low inventory environment. So what you're going to see if you're out there looking for homes is you're going to see an increase in bidding wars where buyers are bidding on the house and they bid the price up. That's to be expected. That's going to be normal in a low inventory market. So you have to have the right strategy when you're out buying. So make sure you're working with a professional agent on that. And then CoreLogic released their national foreclosure report for March 2016. Showed the number of homes in foreclosure dropped 23% from the previous year, from 556,000 homes in foreclosure down to only 427,000. And then the inventory of foreclosed homes for sale also dropped from 1.4% of all homes for sale in 2015 to only 1.1% in March of 2016. So housing is doing very well. Good reports there. In the local news, the next first-time homebuyer seminar in Newark, Delaware is Saturday, May 21st from 10 a.m. to noon at the Christiana Hilton Hotel. And then the next one in Dover, Delaware is Saturday, June 4th, 10 a.m. to noon at the Dover Holiday Inn. Now, you can register for either one of those events by giving us a call at 302-703-0727, or you can register online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.